What's up, YouTube? Mary the Tall One here. I'm just checking in with my dividend investing journey. So today is Sunday, April 28th. So the markets are not open right now, but my portfolio is looking a little better. Everything ended pretty good on Friday. So lots of green. Well, not lots, but you can see gross profit 84.44, and my net profit is finally in the positive $34.20. I do expect that to go up and down. This is my dividend investing chart, so I'm really just focused on the dividends. I have some more purchases that I went over in my last video. The declaration date is May 3rd, although I've been watching everyone's YouTubes on their estimates for what they think the payouts are going to be, and I can't wait for this Friday to find out. And then the payout date is May 8th. So something that I came across in someone's YouTube was that Yield Max dividends are not qualified dividends. I did not know that. And I'm trying to find out more information about that. So, I Googled, are they qualified dividends? And I found this SEC.gov thing, and it seems like they are a blend. So it says fund distributions are generally taxable as ordinary income, qualified dividend income, or capital gains. So I'm not sure, how does that work? If anybody knows, please let me know down in the comments. Maybe I will just adjust this. I am in the 22% tax bracket. My income is actually smack dab in the middle of that tax bracket. So just so you know where I'm coming from. Anyway, income, my investments. So Coney, I did buy some more shares, but I also sold some puts just to get the premium, because I want to own the shares anyway. So initially I was like, you know what, I want to buy, I want to do a limit order for $23 just in case it dips down, and I was going to pick up, 200 shares. And I was like, well, why don't I just sell a put? And I had watched so many options videos, and it's really confusing out there, but I understand selling puts. So if you were going to buy the stock anyway, you want it, and you want to buy 100 shares, go ahead and sell a put. Then you get the premium. Of course, I don't expect the person who bought the put to exercise it until after the dividend. They probably won't go down to 23 before then anyway, because I expect this week will be pretty good for Coney. But that was nice, so I collected the premium. And then I couldn't figure out, why would anybody sell a put above the strike price? And at the time, $25 was above the strike price. And then I did the math, and I was like really surprised. So you can kind of see it over here, but so at the time that I sold these puts, Coney was $24 and change. And I was like, why would anybody sell a $25 put? Because, right, so if you're buying 100 of them, that's $2,500. And what was it? I think it was $270 was what I sold my put at. So $2.70 per share, so $270. So if you minus $270 from $2,500, that's $22.30, and divide by 100, so you're really paying $22.30 a share. That's actually a better price than $23 a share. Of course, with my $23 puts, I'm gonna pay $23 a share, and I got the dividend, and I got the premium for selling the put. So I think the $23 one may be the better deal if it goes down to that strike price. If it doesn't go down to that strike price, I guess I don't get assigned the shares But then that just frees up my collateral anyway, and I can just rinse and repeat and sell more puts next month. So I'm not really worried about it because, like I said, I want to own these shares anyway. And if you didn't follow that, I'm sorry, because I am just new to this too. I'm sure I didn't explain it well. And of course, maybe I'm making huge mistakes, you know. Come for the Shein try-on hauls and stay for the train wreck that is my investing journey. Anyway, that's what I have there. So far, I'm pretty happy with how this is going. Yeah, I am minus $8 in Tesla. I saw some comments about how like I could average down my cost, but I mean, if I just keep on collecting the dividends for the next, you know, like the rest of the year, assuming that Tesla doesn't reverse split again, I bet you my overall profit will be green. We'll see. And then Misty, a lot of people like Misty. I just bought at the wrong time. I bought when Misty was at its peak. So, but you know, that's typically how things go. If I buy it, then it tanks. So, like I said, this is not advice, obviously. This is what not to do. So, you can, like I said, stay for the train wreck. Hopefully it's not a train wreck. I really hope this does end up being profitable. And let me know if I should change this to 22% set aside for taxes. I am having an extra 10% in there, so I am covered. I've got 25% going to savings in a Wealthfront cash account, which is earning 5% interest. So, you know, it should, you know, by the time tax time comes next year, April of next year, you know, I'm sure it'll be fine. But I would like it to have an extra buffer, you know. I would like to save 10% of any income that I make. All right. Well, thank you for watching. Bye-bye.
You might have noticed that my Robinhood account looks a little fuller than it did before. That's because I took out a $50,000 loan from my 401k. Okay, hang on. Wait. Listen, I'm paying myself back at a 9.5% interest rate over the course of the next 5 years. I borrowed money from myself to make money from dividends.